Oil prices dropped as the European Union considered a higher than expected price cap on Russian crude. Increasing signs of a global slowdown also are taking a toll amid mounting headwinds in the two largest economies, threatening energy demand. EU officials discussed setting the ceiling for Russian seaborne exports at $65 to $70 a barrel. That's far higher than many expected when the Group of Seven first proposed the idea as a way of punishing Moscow for the war in Ukraine while keeping markets supplied. Brent is down 0.75% today and currently trading at $84 a barrel. For more on this now, let's bring in Jameel Ahmad, who is Alpari Chief Investment Strategy for Middle East and North Africa. Many thanks for being with us today. Jameel, first of all, we've seen the minutes from the Fed indicating potentially smaller rate hikes ahead. What is this telling us about the global growth path? Because we are seeing all these concerns weighing on oil prices, but essentially the Fed minutes were not that bad, or were they?
Ludovica, it's a very great topic. Generally speaking, the Fed minutes was good news for global assets, such as global currencies. We had the British pound that hit its highest level in a number of months, now at 120. It seemed to have provided further belief that the euro can remain above 1 against the US dollar. So generally speaking, these minutes suggested that we are starting to see an impact of the interest rate increase in the United States creeping into economic data. The full impact is not going to be seen until maybe early 2023 and later on. At the same time, because the pace of the interest rate increases is likely to slow, so it's still going to increase interest rates. Generally speaking, this has weakened the US dollar, which has provided a lot of relief for currencies and assets that have been battered by the strongest year for the dollar in more than a decade. We've also seen the dollar reach its highest level in close to 20 years. So this is good news, but at the same time, there are warning signs that the impact on the US economy is starting to creep in. And of course, that would also impact the global economy too.
And obviously impacting oil prices at the same time. And on that, Jameel, I mean, the price cap on Russian oil, there's a lot of disagreement, and there has been for months now. Can you explain to us what's happening? Why is there disagreement?
Well, obviously, what's happening in the world is very contentious and a very sensitive topic. Generally speaking, yes, we're going to have a price cap. By all means, that suggests that we're going to have a lower oil price over the near term. However, that doesn't mean we're going to have a lower oil price over the longer term, because if we have less supply from one country, let's say, for example, this might be Russia because of the price cap, other oil producers might still step in and provide further supply. Let's just say, hypothetically, Saudi Arabia in this case. So I do think that we have a possibility that the fall in the oil prices might be temporary. At the same time, if we can see more falls in the oil price, it'll be something that's welcomed by global economy overall, because obviously we're heading into a very weak part of the global economy. We know about all the risks that we're facing, and the global economy would welcome lower oil prices.
Right, we'll see what they come up with after talks today. Jameel Ahmad, thank you for being with us today.